Good morning, Steve Free in Chicago with the morning grain comments. Well, soybean markets and the corn market is sharply unchanged, while wheat's down and oil's gaining on meal. Outside markets, the stocks and Bitcoin are trying to recover from yesterday's losses. The dollar's lower, crude's higher, and some of the softs are lower. I think that yesterday we saw kind of a combination of data that suggests that the U.S. economy is slowing, plus no real China stimulus in their annual meeting, plus potential dovish Fed, all led to a sell-off in commodities. In the grains, I think that word that China is going to spend money to increase storage and also try to increase corn production weight on the markets. Right now you've got Brazil beans offered at $413 a ton versus US $447, Argentina meal $372 versus US $397, Ukraine corn $168 versus US $189, and Russian wheat made new lows yesterday, export price close to $198 versus US soft red winter wheat $239. The Dalian soybean meal, palm, soybean oil, and also corn futures were all higher overnight. What we're seeing as far as the South American situation, there's some talk that maybe in a couple weeks Brazil will start drying out, and it could offer some stress to the late planted crops. The Brazil farmer right now is seeing talk that his profitability is down. The export demand could be down. We've got weather that we have to be watching, and export margins are negative. So all these things suggest that there's something going on in Brazil, either a lower crop, prices may be too low, and that the export demand is not what some people had thought. In Europe, oilseed imports are down. And we also note that their imports of corn is down, their exports of corn is up, and their exports of wheat is also up. In the vegetable market, a couple of things. Number one, Indonesia announced increase in domestic biofuel mandate, which could lower their exports, and palm oil is reacting that on a higher trade. But we also noted that globally, India's vegetable imports are down about 18% in February, and the lowest in 2 years. And then we don't know exactly what China's imports of vegetables are concerned. We also note that the wheat market, again, making new contract lows. Algeria bought 600,000 tons of wheat at a price that was $38 a ton cheaper than its previous tender. U.S. prices continue to be higher than other origin, and Australia futures are sharply lower. This due to increased Black Sea and Argentina export competition. So again, we're struggling, at least in the beans and corn and the trading range. Wheat's making new lows, and in general, we need some kind of weather issue to rally prices.